Welcome to the November breakdown of what is happening in San Diego real estate. I am joined today by the CEO of Whissel Realty Group, Kyle Whissel, and he's going to break down exactly the market, what's it's looking like, what's happening now, what we went through in the past, and what we can expect to see in the future, and a few tips for buyers and sellers in today's market. Kyle, welcome.
I am excited to dive in, to share some experience, add some value, and ultimately at the end of the day, just give you some direction on where you need to go moving forward in this market that we're in.
So Kyle, right now it's November. What is the market looking like? Or actually give us kind of a breakdown of what the market looked like year to date.
Year to date has been a tale of two markets. The first 4 to 5 months of the year, we had a upward market where we saw number of home sales increasing, the price of homes increasing. It was a very positive direction for the market. And then we peaked out around April, May of this year. We saw where things kind of plateaued. And then we've really just been heading in a downward market since that point. A lot of that is been a little bit interesting because rates have actually come down this year. Which is what was expected. But as rates came down, we didn't see prices go up like we thought they would, which was kind of interesting. But if we stop and take a look at why did prices not go up, is there was this little thing called an election that just happened, here at the beginning of November. So I think there is a lot of pent up demand. We have seen rates decrease from where they were a year ago. So in theory, the market should turn in an upward direction, but it didn't happen because of the election. There's a lot of times what I look at is like a slingshot effect is what I feel like has been happening this year. Is we've kind of been pulling back, waiting for this election to happen. Now that the elections happened, we have some clarity. We know who was elected. And I feel like we're going to let go of that slingshot. And I think the market is going to go back into an upward trend. And we're already starting to see some of the early indicators. We've only had one weekend so far since the election, but the amount of foot traffic coming through open houses, the amount of people inquiring online has started to increase on a week over week basis, which is always a really good indicator of where we're going to be headed.
So what you're telling me is we are going to have higher prices on homes. Is that what it's looking like?
So there's some data. There's some data that comes out. There's three pieces of data that I've really been tracking around elections. The first piece of data has shown historically that more often than not, interest rates for mortgages decrease between the month of July and November. That happened again this year. There's two additional pieces of data. The year after an election, 7 of the last 8 times, the number of or the price of homes has gone up after 7 of the last 8 elections. Additionally, the number of homes sold has gone up 8 of the last 8 elections. So if history repeats itself, which I'm very confident that it will in 2025, that you will see the number of homes sold in 2025 be higher than in 2024, and the price of homes sold in 2025 be higher than 2024. And if anything, because of the direction that the election went, I think you might see that even accelerate, where we might catch some of that bottoming out might happen here in Q4, and it might even start to trend up as Q4 finishes this year. I think the first quarter of Q2, we definitely start to heat up. And by Q2 of 2025, I think we are on fire.
Now, when Trump was announced that he won the election, we saw a jump in interest rates. Why did that happen?
So what is interesting is that there's a lot more optimism about the direction of the economy with Donald Trump being elected. And what you've seen is a lot of people be more willing to get into riskier asset classes. So a lot of people, with the uncertainty around the economy, had their money in more safe things like bonds. Well, when Trump got elected, a lot of people feel more confident about the direction of the economy. They've been willing to take their money out of bonds and put them into things like stock and cryptocurrency. And in the first week after the election, you've seen cryptocurrency hit all-time highs. You've seen the stock market shoot up. And so now when people take money out of bonds, move them into those more risky assets, now the yield on those bonds has to increase because they want to attract people to come buy those bonds again. Well, as the yield on bonds goes up, mortgage rates go up alongside that. So as typically when stocks and crypto go up, mortgage rates also tend to go up.
And then what should we expect? Is this across all of San Diego County? Is it different in different pockets? What does it look like?
So that's going to be on a national level where you're seeing that with rates. As far as, within San Diego, the thing that I'm seeing that's more San Diego specific, that's interesting right now, traditionally the inventory or the supply of condos for sale in San Diego tends to be lower than the supply of houses for sale in San Diego. But it's inverted in the last 12 months. There's actually more condos for sale now than there are homes for sale. So that goes a little bit against the historical norms in San Diego. Part of that is condos have had a lot of issues over the last year with insurance, especially if they're condos that might be out in more fire-prone areas. A lot of condo complexes are having a really tough time with insurance on their on the HOAs. As a result, the HOA dues are increasing significantly on a lot of these condos. And some of these condos can't even get the insurance that's necessary to rebuild the community in the event that a catastrophic disaster happens. So some of these communities are underinsured right now, where if the whole community burned down, they'd be screwed because they cannot get the policy that's necessary to cover it at a rate that they can afford. So you actually have some underinsured condo communities out there. As a result, a lot of lenders won't loan on those condo communities.
How is that something that if someone's looking to buy in a condo, how do they check that out?
Yeah, more so now than ever, you really have to be careful when you're buying a condo to understand the situation with the insurance on that. You need to make sure that they have a policy that fully covers them. And so if you're working with a good lender, we have an amazing lender partner with Cross Country Mortgage. They actually have a team internally that will go and do a deep dive on the entire package from the HOA, where they will look at the insurance policy to make sure there's adequate coverage. They will make sure that they have enough reserves in the case that there is a incident where roofs need to be replaced, or balconies or stairs, or some of these big events come up, that the community actually has the reserves to cover that. They'll also look at some of the other details. Something we've run into recently is some of these condo communities out there, the ownership, there's these investment groups that own more than 50% of the complex. We actually have 2 listings right now where one person owns more than 50% of the units in the complex. That actually causes issues with financing. So it's really important that you work with a team like ours that has a great lending team that can dig deep into those condo documents to make sure that you don't get yourself into a tough situation where you're going to have issues getting financing.
Now, when it comes to listing your home and selling your home as we come towards the end of the year, what are some of the things that homeowners, give me a couple, 2 or 3 things that homeowners need to be aware of that may be different now than it would be maybe 6 months ago?
So the big thing right now is you got to be patient. This is not a market where your home is going to sell in a week or 2. This is a market where it's going to take a month or 2 or maybe even 3 months for your home to sell. So that's a big one, is you've got to come into it with proper expectations. If you're talking to an agent and they're setting an expectation for you that your home's going to sell in a week or 2, that would be a red flag to me. Now, of course, there's things you could do to price it to make that happen, right? Price for $1, it'll sell in a day or 2. But realistically, if an agent's telling you they're going to have your home sold in a week or 2 and they're guaranteeing that, they're either guaranteeing you that they're going to give you a lowball offer, or they're setting a false expectation. That's something we really don't want to do. I want to set a proper expectation for you. Last thing I want to do is list your home for sale, and then 2 weeks into it, you're like, well, hey, Kyle, I thought you said the home was going to sell. And you're like, yeah, well, I kind of just said that to get the listing. We need to reduce your price. Like, I don't want to be in that conversation. I want to set a proper expectation for you so that we don't end up in a, we're bumping heads. That's not something that I want to get into. So 1, you got to have a realistic expectation on timing. 2, you got to have a realistic expectation on price. This is not a market that is in an upward trend right now. It's in a downward trend. So if you cannot look at what the last comparable sale to yours sold at and then price it at or above that, right? That is whatever the last home sold for that's comparable to yours. That's now the ceiling. That's your best case scenario. Your most likely case is you're gonna sell for less than that, because that's just the direction the market's headed. If you think that you're special and that you're gonna be able to price it above where that last home sold, what's gonna end up happening is you're gonna price it high. Somebody else is gonna come in with a realistic expectation and price it low. And now they're gonna sell, and they're going to start to lower the market even more. By the time you finally come to terms with the reality of the market, now you're going to have to cut far more later than if you had just made a small cut early.
When people are looking to buy in San Diego, a lot of times people start searching on the internet, and you'll hear about seasonality, but then you may say, people living in San Diego say we do have seasons. We have 2 seasons. We have hot summer and cold summer. Do we see the same seasonality shifts in terms when it comes to buying as we go into the winter season that you would see in like Illinois?
Yeah, you would think that San Diego having arguably the best weather in the entire country, that we don't experience the same seasonality as other markets where, right, they have more extreme, right? Arizona in the summer is 100 plus degrees every day, and Fargo, North Dakota is negative degrees every single day. But the reality is all those markets have that same seasonality. So, it's a more of a national thing. Do we experience it as heavily as those other markets? No. But the seasonality more so occurs around schools. So you tend to see, like, once school's in session, the market tends to slow down. The fall, winter months, the market tends to be slower nationwide. And then it starts to heat up in the spring and the summer because people start looking at where they want to go in the spring. A lot of times, especially if they're relocating from, in outside of San Diego into San Diego, or San Diego to outside of San Diego, you want to try to nail down where you're going to go in the springtime so that you're good to go for when schools start the following year. You need to be in that neighborhood within a certain period of time. So we tend to see spring be the busiest time of year. Summer, still, you continue to ride that out. But as summer tends to end, the market starts to slow down in the fall. It always bottoms out in the winter, picks back up in the spring, summer, and same thing. So even though we don't have the same weather swings that a lot of other states have, we still have seasonality, but it's much more around school than weather.
Cool.
Also, people that are in Fargo, like, they can't really go anywhere in December, right? They're stuck. It's stuck in their igloos all winter long. And, so the seasonality of the weather does affect things because in those markets, people sometimes are hunkered down as they go through the rainy and snowy season where they don't get out. Whereas like the summer season, all the people in Arizona, when it's 100 plus degrees, they're coming to San Diego. It actually causes the market to increase. So some of those vacation markets actually, like San Diego is somewhat of a vacation market. You have a lot of people from Arizona, from Las Vegas, that are getting away from that really hot weather in the summer, and they come out to San Diego. They want to hang out at our beaches. They actually help prop up our summer selling season a little more than where the summer selling season in those markets is actually really slow because it's so hot.
Interesting. If someone is listening here and they go, okay, I don't want to move. I'm good here. Now that the election's over, I'm looking to invest in real estate. What should they look at? Should they look at buying an Airbnb? What does it look like right now in today's market if someone's looking to invest?
For sure. So if you're looking to invest in San Diego, if you are looking to simply buy a property, like a single tenant property, and rent it out, unless you put probably close to 50% down, you are going to be losing money every month. You are going to be in a negative cash flow position. So it's very tough to cash flow if you're just trying to buy, a condo, a single family home. You are not going to cash flow unless you put a significant amount of money down. If you start to buy, getting to multi-unit, 2 to 4 unit properties, or buying a commercial, which is a property that's 5+ units, if you can find something that has some upside to it, maybe the rents are low, maybe the property's dilapidated, there's some opportunity to improve it and increase rents. Maybe you can find something where you can cash flow with a little bit less money down. But the big opportunity in San Diego and Riverside right now is to come in and buy a property and add units to it. So there's a lot of rules in place in California, specifically in the city of San Diego and city of Riverside right now, where they're allowing you to add accessory dwelling units, also known as ADUs, where you can, statewide, they allow you to add 2, but these 2 cities in particular are allowing you to add significantly more than 2 units. And so I'm doing a bunch of these right now. We've got projects where we're doing 20, 30, 40 plus units where you currently have single family homes. So whether you want to add 1 or 2 units or 20 or 30 units, there's an opportunity right now to build and add units where you could actually get significant cash flow when all said and done. Obviously, the more risk you take, the more capital you put into things, there's more reward on the back end of it. But doing things where you're adding units, or if you're you don't have a ton of capital, but you have some capital. My sweet spot right now is to buy like a 2 to 4 unit property that has garages, convert all those garages, where you could take single car garages and convert those into tiny studios, or you could take like a 2-car garage, convert that into a 1-bedroom unit. But converting garages into living space, the cost to convert in relation to the rent that's received is insane. So that's one where there's a lot of value add opportunity. 2 to 4 unit property that has garages, convert them to ADUs, rent them out. That's where you can really crush it right now. I think that's the biggest opportunity in San Diego and the Riverside.
Got a couple more here and then we'll wrap this up. But I was thinking about what we were talking about earlier with interest rates rising, with home prices looking to rise. It's making it more expensive. I know there are programs out there, and if you could share just one with me, how can someone that's looking to get into real estate, maybe for their first home or maybe their next home, but they don't want to pay that 7% or 6% or 5% rate, what are some options that they can look at to get a more affordable home?
Absolutely. So there's 2 primary options out there for this. One, there is what's called an assumable loan. So people who got their existing loan more than 3 years ago, like I got my loan 3 years ago, I have a 2.0% interest rate on my home. That's very attractive. That's very low, but a lot of people have mortgage rates in the 2s, the 3s, the 4s on their home. And if their mortgage is a USDA, VA, or FHA loan, that loan is assumable. So you could come in and buy their home, and then you just have to cover the spread between what they owe and what the property's worth. And there's even an option to finance that. You just cover the spread between the balance on their mortgage and the purchase price of the home. And then you can take over their loan at the existing interest rate at 2, 3, 4%. So that could be very attractive. Even if their loan is not assumable, there's something that's called subject to financing, where you could buy their home subject to the existing financing that they have on the home. That's a little bit more creative. You got to work with somebody like our team that understands this subject to stuff, or sub to as it's often called. But whether you're assuming a loan or buying something subject to the existing loan, that's an opportunity for you to come in and buy something at today's prices with 4 years ago interest rates.
All right. Phenomenal. The last thing I want to do quick fire. I want you to give me your best tip for, and I know we've talked a lot about this, but I want you to give me your number one best tip for a home seller, and your number one best tip for a home buyer, and your number one best tip for an investor, someone who wants to invest in real estate.
That's a lot to remember, Brian.
Just do one at a time. And so give me your number one best tip for a seller.
So number one best tip, if you are selling your home in San Diego or Riverside County, is you have to finish unfinished projects. Number one most important thing, because if somebody comes into your home and they see some wires hanging from the ceiling where you intended to maybe replace a light with a ceiling fan and you never got around to putting that ceiling fan up, people are going to see these wires hanging from the ceiling and they are going to take this tiny little issue and turn it into a really big issue. So you want to eliminate something like that. That's so easy to eliminate. Just finish things like that. So if there's electrical, maybe you have a plumbing leak, and people see like, well, they've known this plumbing leak is here. Why didn't they fix it? If they didn't fix this, what else didn't they fix? Like, that's where their mind goes. So number one most important thing if you're selling your home is finish all of those unfinished projects.
All right. What about buying?
Number two, if you are buying a home in San Diego or Riverside County, you've got to work with an agent who has access not only to the opportunities that are on the market, but also the opportunities that are off of the market. So in California and really the nation at this point, there's a lot of rules around how you can handle off-market properties and whether or not you can advertise them. The big thing is if you can advertise off-market properties within your existing brokerage. So some of the bigger brokerages out there have their own internal system for off-market properties. I know our brokerage at eXp Realty, largest independent brokerage in the country, we have our own internal system called eXp Exclusives, where there are hundreds of off-market opportunities on there. So you want to work with an agent who's not only showing you the on-market stuff, but also the off-market, because the on-market, if it's a good deal, they're still getting multiple offers on those properties that are, priced right. Where off-market, you might be the only offer on the table. So you want to make sure, one, you have access to all of the options available. And a lot of times those off-market options have a lot less competition. So make sure you're working with an agent that gets you access to on-market as well as off-market opportunities.
And finally, if someone's looking to invest in real estate, what's your number one tip?
If you're looking to invest in real estate in San Diego or Riverside County, you have to understand the ADU rules and laws. Especially the city of San Diego and the city of Riverside. They are very progressive, and they are trying to satisfy the need for more housing in these cities. As a result, they are fast tracking the ability for you to convert existing living space into units. They're also fast tracking your ability to add units, and the cost to convert space or to add units in relation to the rent that those units are going to bring in is extremely attractive. So if you are looking to invest in those areas, you want to make sure you understand the ADU rules, or that you're working with an agent that understands them.
Kyle, if someone wants to dive in, get more information, has questions about this, how can they reach out?
Yeah, so if you do want to connect with our team, just give us a call at the phone number down below. That'll connect you with the team. Again, we'll ask you a few questions, understand your needs a little bit better, and then we'll pair you up with the right agent on our team to help you meet those needs.
Thanks so much.